I gotta say something about some of the people making some very high predictions on silver, and I compare it to a pump and dump like what you would get when a stockbroker or somebody financial advisor is out there telling people buy these stocks, they're gonna go way up, buy them now, they'll make 10 times the money, put down 5,000, make 50,000, whatever, I'll turn $10,000 into $250,000. And that's basically what's going on with the physical silver market too. You got the same kind of characters in there, and I'm going to go over this again with this demand destruction. Every time I see this stuff about people saying that silver is going to go to a 1-to-1 ratio, silver to gold, it's going to be worth as much as gold. It'll be worth more than gold because it's used in more industrial applications. And no, I'm not a shill for a paid shill. I don't get paid shit on this thing. You know what? If I was going to put some money out here for videos, I'd go down to some bar, take my camera, take a video of some broad shaking her ass and post it up here, and I get views, okay? That's how you make money. Not giving out facts. But I'm telling you that the silver to gold ratio is not going to go to 1-to-1. If it does, it's going to be a very, very short-lived panic. It's not going to be that way fundamentally. There is way more silver on this earth than there is gold. And I want to talk about demand destruction again. This is a chart off the Silver Institute. It's in millions of ounces. Just say this is 2010 is your last column. For instance, if silver was worth more than gold, do you think it would be used in photography? No. It would be done. They'd find some other alternative. And that is the whole key behind demand destruction. Necessity is the mother of invention. And I'll give you an example about a commodity that was extremely valuable in Roman times, in ancient times. It was salt. Ordinary salt. The reason it was so valuable, it was almost like energy in a way, because it can store food. You can take meats, put salt in the meats, and soldiers can take foods with them on long trips. They needed the protein, because basically the industrial engines at that time were human and animal. It wasn't off of machinery. There wasn't any oil-driven machinery at that time. So basically it was human power and animal power. And salt was the things that enabled people to travel far because they could take food sources. Who ever would have thought of that they can refrigerate and freeze foods and can foods and preserve them in plastic packages and that type of thing? Nobody would have ever thought of that. That brings down the demand for salt greatly. Also the way that you could take out salt of the earth, and mine it much more cheaply. But back in the day, in the Roman times, hey, if you invested in salt, you can't lose, right? Well, it's a simple example, but an extreme example of demand destruction. But the landscape will change. If silver goes to some astronomical price, I think it is. I think it's going to be a panic due to debt crises throughout the nations. That's where it's going to go. And I guess basically I probably shouldn't say much, but I got a very small channel, but I do get aggravated at people trying to tell me something that I don't understand. And I'm saying I do understand fully, and I do understand pretty much where these people are coming from when they're pushing these very, very high astronomical prices for silver. And I think the only way it's going to go to that way is with extreme inflation. It's not going to be because of fundamentals. It's going to be inflation, and it's also going to be panic due to a debt crisis. That's really what's going to drive it more than anything. Fundamentals are going to do it too. But, the same people will tell me that silver will go 1-to-1 to gold will argue with me that if I say palladium will be worth more than gold at one point in time, they won't buy into that argument. But even though platinum is far more rare than gold, and palladium is more rare than platinum, and it's industrial used, and it's also in all the new energy conserving and green technology that's out there and used a lot more in hybrid cars, they'll still tell me, you know, I'm wrong about that. But I guess, what it comes down to is, you know, do your own thing, do your own thinking, and just stick with your plan. But, you know, just telling some people, though, that photography would be out the door if silver went to the price of gold. Jewelry, I think a metal that tarnishes as jewelry would not be as appealing. Silverware, I don't think there'd be much of that around. Coins, I don't know, maybe. Industrial applications, a lot of it's used in electronics, but there's other substitutes out there. I mean, gold can be used instead of silver. I mean, is palladium going to be, 1/3 the price of silver? I don't know. I mean, that's what people would think, you know. But even in industrial applications, they'll find many ways around it. One of the other uses of silver is in mirrors, and already they're switching to aluminum. Maybe you just have to put more aluminum and maybe put a micro coating of silver in there or something on top of the aluminum. I don't know what you'd have to do, but they'll find out ways to use less and less of the metal. And once the demand destruction goes down, the price will drop. So, I don't know. These people telling these stuff, and I know what they're doing. When they're telling people to hold those, you're going to be telling these people to hold these metals after the bubble breaks, because they're going to sell it to them. And that's what I think is going on with a lot of these people that are pushing physical silver, including some of the most famous people out there that are internationally recognized. I'm not going to get into all these names, but I think they got a game going, and that's what I think it is. You saw, I don't want to pick on Eric Sprott per se, but Eric Sprott didn't tell you one word when he sold his silver, and he sold it right at the top. He didn't say it beforehand, he told you afterwards, And everybody else is like, the conspiracy crashed the price. Yeah, great. Now, do whatever you want, but I'm telling you right now, beware. Beware of these people pushing these high prices. I want to get on to something with this oil, and this is very much related to silver, despite what people may or may not think. And I notice most of the silver crowd doesn't even think about oil because it's separate. It's just oil, and like nothing's related to each other. Typically, though, if you look last April, when the oil was going in a hard bull market, silver was taking off. And this is going to happen this year. That's why I'm holding my silver position. I'm not worried about Sprott's fund, the electronic fund. It's kind of weird. That fund went up today, and silver went down. I mean, it doesn't actually move with the price of silver, so I guess it was gaining back some of its premium, I don't know. I'm just holding on, but I know I'm going to dump that fund if it can make more than double or something. It's going bye-bye. And this is some panic story. I think this is going to happen fairly soon this year. It's going to happen this year. I don't think it's going to happen later this year. My senses tell me, if they're good or not, that oil might pull back a little bit. I'm going to buy if it gets down to low 98 ranges and start buying in there. This is a story from, they're talking about oil prices could rise as high as $150 a barrel because of the European Union ban on imports of Iranian crude. This is according to Iran's deputy oil minister. So I think that's a big BS story that's coming out from the deputy oil minister in Iran. I don't think it's going to actually rise due to that. I think it'll rise because I don't think the sanctions are going to work. They're just going to sell the oil to China at a steep discount and sell it to India at a steep discount, and maybe exchange oil for gold. Now, I did figure out one time, I made a calculation. If you took all the gold that was extracted on a mining per year, and you used that just to pay for oil that was produced per year, which is like 89 million barrels a day, and you did the calculation, if you just use gold for the trade in oil, how much oil is traded every year, you would have to, gold would have to be $50,000 an ounce, or just over that. And that is a fact. So actually I am very bullish on the metals, but I don't like some of these predictions out there, and I kind of know what some of these clowns are doing. I don't like it. And they're steering people wrong, especially the little guys. Because the big guys are going to get it right, the little guys are going to get it wrong. Anyway, as far as, so when you're doing this stuff, when trading oil for gold, like when India and China are doing this, what's going to happen is that is going to be very bullish for the gold prices. And obviously, there is definitely a link between gold and silver. I mean, gold moves up. A lot of times, silver follows. It doesn't follow exactly perfect, but a lot of times it follows. But I think when they have this actual conflict with Iran, which they're itching for, that is when you're going to see the silver really take off. It's going to go pretty much neck and neck with the oil, and that's when you're going to hit these high prices. But I also think it may pull back when, say, there's a problem with the European Union, and if there's a problem where the European Union has some severe problems, that's when you might see commodities crash. And so I think there's going to be a hell of a lot of volatility this year, and that's something to watch for. So I'm going to try to sell when it's up at the top, take my cash, and I'm going to hold on to this physical silver, most of it, but I'll probably sell some of it off this year if I get some extreme gains. This was a story about Iran, gold, and oil, the next banksters' war. He says, remember the real reason why Gaddafi is dead? He dared to propose and start creating an alternative currency to the world reserve U.S. dollar, which is the golden dinar. And that was the same thing, well, not exactly the same thing, but with Saddam Hussein. He was using he wanted to invest in euros versus dollars, so he got invaded. I'm not sure even if he was even alive at that time, though. I'm almost thinking that was his sons that changed the policy, because he possibly might have been dead already because he had some severe type of cancer that was being operated on, and it might have been hushed up because the guy that actually was hung, I don't think that was him. The teeth were crooked and the family says it wasn't him and all this type of stuff. So, but that's just a side note. But Saddam Hussein tried the same thing. They would not use the U.S. dollar as the world reserve currency, U.S. dollar, for trading oil. So he was knocked out. Same thing with Muammar Gaddafi. And Iran's oil bourse is set up whereby they use everything except the U.S. dollar. So that's a given, And I knew this. They were setting that up since 2007, but it wasn't until like China more recently start getting on a more direct barter agreement with Iran, bypassing the U.S. dollar as the world reserve currency, along with between China and Russia, China and Brazil, and all this type of stuff. I mean, it's been going on for some years, piece by piece. I think that there was definitely a plan that they're going to attack Iran. They're going to have to make it look like Iran started it, and that's the way it's going to happen. This week, it goes on this week, the warlords of the West took another step toward the long-desired war against Iran. Open war, that is. Covert war has been going on for decades via subversion, terrorism, proxies like Saddam Hussein. They used him against Iran. On Monday, the European Union obediently followed the dictates of its Washington masters by agreeing to impose an oil embargo on Iranian oil. That I knew somebody must have said something to the European leaders, because they did a 180-degree flip on that. 1 week it was, we're not going to do the oil embargo, and so the price of oil started dropping, and the next week somebody must have talked to some people over in Europe because they all changed their mind. Quite obvious. Then the oil prices went up. But I do want to say something about these oil prices, even though you're more into silver right now. But they've been sitting at a very tight range, and I don't know if they're going to go up or down. It would usually, when they're in a tight range, they're going to go hard one way or the other. And it makes you think, with all the global tensions out there, that they're going to go up hard. Now, if that happens, I'm going to maybe go a little bit into double leveraged oil, but I probably might go into, if I don't see silver move up right away, I might go into AGQ. And with the reasoning that if oil goes up due to severe tensions in the Middle East, like going up hard, and silver didn't quite move yet, and I'm just watching all this stuff, I'll go into AGQ. And if I get a 10 or 20% gain off of that, it's gone. That's the way I play it. India and China they take about 1 million barrels a day per day from Iran, which is 40% of Iran's total exports of 2.5 million barrels a day. So what they are doing is they are trading gold for oil, and I don't know how much of it, but you know that's a better deal than taking U.S. dollars, I think. So Iran is not going to get screwed up on these sanctions because these other countries are going to be trading with Iran. Maybe they're hurting them somewhat, but not going to hurt them too much. So I know what's going to happen in the long run, or maybe the short run. By trading in gold, India and China enabled Iran to bypass the upcoming freeze on its central bank's asset and the oil embargo which the European foreign ministers agreed to impose on Monday, January 3rd, 2012. The EU currently buys about 20% of Iran's oil exports. And you know, Greece is really not wanting to get along with do this because they're buying oil from Iran on credit, and Iran's the only country that's letting them do that. So, you know, this isn't going to work, period. So they're going to attack them, I know that. And when they attack them, that's when you're going to see gold, silver, and oil fly right up to the moon. So, but what I think is going to happen after that, that's going to cause an economic collapse, and you might see those commodity prices come crashing down pretty hard too. So beware. Beware. Iran may be isolated from the United States and Western Europe, but Tehran has some pretty staunch allies. Iran and Venezuela, which I don't really consider Venezuela very powerful, but India, China, and but one thing that's going to happen is with China, they're going to be able to buy oil and gas from Iran at depressed prices. And you remember that if they discount the oil or the natural gas by 10 or 15% and of the sales price by that much, that is seriously cutting into their profit margin, because I don't really know what their profit margin is, but you say their profit margin was 40%. If you cut the price by say 15%, that's like cutting your profit margin like more than half or something like that, because I'm just throwing a number out there, but in other words, if you're taking 15% off of the 40%, so it's cutting out about 40% of your profit margin, roughly 40% of your profit margin also. So that's a steep cut, so that will hurt them, but it's going to help China. So the elite on the western side, they're kind of screwed no matter what they do, And I think the real game that they need to do is to build up the United States and not let it go down to a third world country like some of the elite want to do, like George Soros. But do know that there are many elite in this country that are not in agreement with George Soros' attitudes about the United States. So, they might be devils, but they want to make sure the geese that are laying all the golden eggs for them on this side of the world are going to keep laying those golden eggs for them. So they're on the side of the USA one way or another. So that's one way I look at it. They're not great people, I wouldn't say that, but they're not in a camp where they're anti-USA. I could point that out, and so I think this is definitely going to happen with this war, but this is going to be very, very bullish for silver. Very bullish. That's where we're going to see these crazy gains. And it's my personal opinion. And just using common sense, what's going to happen when oil prices go up real high, or silver prices and all this stuff that's used in all these commodities are used in all these goods? It's going to cause rampant inflation. The economy's going to stink. Spending's going to be cut down more and more, and it's going to probably crash the economy. And if that happens, you're going to see this bigger crash. And I don't know if that's going to happen this year. Probably might happen in 2013, but that maybe you'll see this bigger crash that both Mark Farber and Jim Rogers allude to, which I greatly respect, that they will have this bigger crash worse than 2008. And what happened in 2008? Silver crashed, palladium crashed, platinum crashed, gold crashed. Of course they recovered. Yeah, I know they recovered, but they crashed. So, If you were really smart, you would have sold the stuff at 20 bucks and bought it back at 8.50. You know, and you don't see people telling you that. You tell them, they ever tell you the conspiracies telling you that, well, do whatever you want. Me personally, if I see silver go up to $75 an ounce this year, there's going to be some sales. And I think there's going to be a crash because it's going to be all the commodities running up together, copper, the whole deal. The whole deal, all the way across the board, palladium, platinum, all of them. I think they're all going to run very strong this year. And there's going to be a hard crash after that. I mean, what else is new? But the physical silver hoarding crowd will tell you, hold, 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 hold. Well, do whatever you want. That's not my strategy. I could be wrong, but I'm never going to say that silver is going to be worth more than gold. If it happens like that, it's going to be a panic, and it's going to be very, very brief. Not fundamentally. No way. And you know what? I do know what I'm talking about. I run numbers quite a bit. And I've seen all the arguments. And I'm not a shill for the banksters. You know what? I cut the banksters' throats, their stupid wives, and their stupid vermin kids in 2 seconds flat. No problem. I am worse than a 1%. I go into the fire, and I'll cut their throats in 2 seconds flat and smile on their face, and they'll never know it. I stick them in the back. But I'm telling you flat out, you're getting played by these physical silver bugs too. So watch. Try to play in and out. Because what you're doing, physical or not, you're playing the market. Whether you think you are or you're not, you're playing the market. So